Good evening guys and welcome back to Finance Lingo. In this video I'll be sharing with you my views on this coming IPO on RE&S Holding Limited. So let's start with the disclaimer. This presentation is provided to you for general information only and does not constitute a recommendation and offer or solicitation to subscribe for, purchase or sell the investment product mentioned herein. So basically I'm just sharing with you my views on this coming IPO. So let's get started. So this is the prospectus of this coming IPO, RE&S Holdings. This is how the company's prospectus cover page looks like. So to download a copy of this prospectus, okay, you just need to visit www.sgx.com. Okay, go under the company information tab, click the IPO prospectus, and on this tab you will see the RE&S Holding. Just need to click this. Okay, a dialog box will pop up, and you can just download here and download a copy. At the same time, you can obtain a copy at this main bank's branches. Alright, so alternative, you can just download it to be more environmental friendly. Alright, so here we go. So this is a prospectus. So as a start, okay, I'll just be sharing with you the first page of this prospectus, what is they are trying to share with you. So this company is trying on to offer 38 million shares to the public and basically any investors out there. So what we are looking at here is that this company is offering 3 million shares to the public at 22 cents each, and apart from that there's a tranche B, okay, which is offering 35 million shares, of which 6 million shares is made only a reserve for their employees and the board of directors, whereas the rest is for those accredited investors who want to, and through DBS, whereby they are the placement agents and you get to subscribe more of the shares through DBS. Alright, so here we are. Okay, apart from that, there is another batch of cornerstone investors which is not shown here, but that really got nothing to do with small investors like me. So if you're applying for the shares through the ATM or internet banking, you are basically applying for this tranche A at this for these 3 million shares. Okay, for a pie of these 3 million shares. So okay, so this is page 1. So what we are looking for next, we are going to page 30. Okay, so as what you can see, the opening of the IPO started on the 15th November 9 p.m. and the closing of the application is 20 November 12 noon. So you guys can go to the ATM and start applying at this time. Alright, so by the way, if you do have a DBS Vickers account, you can just give a call to the broker to see if you're really interested in this shares. Okay, alright, so next we are looking for here is the okay, so the results will be shown on this 21st, and on this 22nd November 9 a.m. the stocks will commence trading. Alright, so for those trade done on this 22nd, the settlement dates for all the trades is done on the 27th, which is literally 5 days later. So okay, here we are. This is indicative timetable of the listing. Okay, the rest is just a lot of technical jargons. Okay, next I'll just go to the page 41. Okay, so what we are looking at here is that the market capitalizations of this company, okay, after the issuance of these shares and the cornerstone investor shares, basically there's 354 million shares outstanding. So as a start, I just actually type this down over here first. Alright, so yes, there will be 354 million shares out there once these companies start trading on the stock market. Alright, so this is the market cap of the company. Next, I'm going to page 66. Under the use of proceeds. So over here, well, the company, what they actually mentioned here is that they are going to use much of the proceeds for business establishments and new F&B outlets, any acquisition or joint venture, etc. And some of it will go to refurbishment and improvement of the existing F&B outlets, and some general working capital. So here there is the breakdown of their plans. So for every dollar they raise, okay, 59%, or you can say like more than about half, or slightly more than half, will go towards the business expansion plans. Okay, and apart from that, another 70% will go towards refurbishment of the existing outlets, and the rest will go for working capital requirements, as well as placements and underwriting expenses for basically the listing expenses. So that's what you can see. Not bad. Quite a significant amount of funds is being channeled for business expansions. Okay, so right, let's now goes to page 70. Okay, so here we are. Okay, blah, 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 blah. Okay, so we are coming here to the cornerstone investor. Cornerstone investors. Okay, during the invitation of the shares, they have managed to find one cornerstone investors, or to say a VIP investors. Maybe it could be some fund managers. I'm not certain why they never mentioned who it is. Maybe I couldn't find it, or I just overlooked it. So anyway, this cornerstone investors is subscribing for 60 million shares. All right. So yes, this is a pretty good sign that there's a lot of some institutions is interested in this company as well. All right. So, but they never mentioned which company. Next, I just going to page 73. Okay, the company, this is a dividend policy. I'm just going to jump straight to paragraph 3 of paragraph 4. Okay, the company intend to distribute 35% of their net profit distributable to shareholders on financial year 2018 and 2019. In short, they're going to distribute 35% of their earnings to shareholders as dividends for the coming year 18 and 19. Okay, this is a pretty good, a pretty decent, or we can see that the company does want to retain much of the profits, okay, to participate in the company growth. Okay, so I will say that, well, this is a pretty decent ratios. All right, so let's just move on. On the page 76, correction, 76. Okay, this is the company group structure, and okay, I think it's tilted, so I'm just going to show you an alternative pictures which I've tilted backwards. Okay, this let me see. No. Okay, this is the group structure. Okay, so I'm just going to enlarge it first. Oh. Okay, so basically, as what we can see that during the listing, all these K, R, E, and S companies, or promote Japan, Singapore, Malaysia, blah blah blah, and all these sole proprietors come registered companies. Okay, it's all under the RENS holdings. What we can see here is that this is very good. I'll say in the form of behavioral finance. This is kind of the structure is investors really like to see, because a lot of these companies during the startup is registered as sole proprietorship, and this where business risk is actually carried forward beyond the risk of the beyond the founder. Okay, but now that it's incorporated, of course, it's a limited company. All right, so here we are. This is companies under the RE and S. Right, so let's move next. Okay, next we are going to the shareholder structure. So okay, before the IPO, okay, so this Mr. Hiroshi Tatara and Mr. Mr. John Yek, okay, collectively own 100% of this company. Okay, and Mr. Hiroshi Tatara actually owns 75%. So, so after the completion and issuance of all these shares in the IPO, the two major shareholders will have their ownership of this company diluted to from 75 to 61.9, and Mr. John Yek will reduce to 21.2%. Okay, the other board of directors, Mr. Ben Yochi Xiong will own 0.8%, whereas the cornerstone investors in this case will own over 16 million shares of this company, which attributes 4.5%. Whereas the rest will be 0.8%, and those minority shareholders, okay, will own about 10.7%. Right, so this is the shareholder structure after listing. So from this page, what we can see that after listing, the major shareholders remain to hold the bulk of this company. So will they be let this company fail, or thereafter, I don't doubt so, because they are having the major shares here. If the company would fail, they really lost quite a lot of their business there. And what I can see here is that from the earlier things, that they are the one that found all these companies. So I don't think that this is a ill intent listing. This is a listing whereby the board founders really want to have to expand this company. Right, so this is what we can see here from this shareholding structure. Basically, they just want to gather funds to really expand the company further. Okay, so that is a very good intent of them, or very hardworking founders. So next we are going to page 89. So it is page 89. Okay, now let me see. Oh, did I miss it? Just let me check it out. I think I make some mistakes there. Let me see. Yes, coming to this page 91. Here we are. This is the cornerstone investors. Just now on page 1, we are talking about this 38 million shares, and there's this cornerstone investors over here. Okay, so I think I missed one page. Just let me, okay, yes, this is the page 92. So what we see here, this is the earnings of this company. Just let me, okay. So as what we can see from their revenue over here, this will be page 92. Okay, so this company, what we can see here before the listing is that their revenue is increasing at a pretty decent slow pace, and the profits a little volatility. Well, they did manage to remain relatively constant. Okay, so all in all, a pretty slow growth company, but there is still some growth cited here. No doubt, although the net profit there is some decline, but this is part and parcel of business. Right, so some decent growth. Okay, so now we are going to page 148 to see their trademarks. Alright, so these are the trademarks of the company that they owned. So if you have visited any of these restaurants by these logos, probably you have visited their restaurants. So here we are, the okay, Korean Manji, Kariyaki, Sumiya. Okay, so these are some of the companies you probably have seen before, like Ichiban. I've seen this before, probably visited a few times. So these are the companies that is under their holdings. Okay, so Ichiban Bento, Idato, Anteno Plaza, Korea, etc. So these are the logos that is registered by them, these trademarks. Alright, so okay, so right now we're just going to more in depth. Alright, so what I did here was I had some calculation prior to this presentation. I'm just going to enlarge this. Okay, I believe that it's going to be blue on the screen. I'm just going to enlarge it further. Okay, so here we are. Okay, I just go page 216. Okay, so what I did was I extracted all these numbers, revenue and net profit, from this page 216, the revenue and the net profit here, to derive some of the numbers. Okay, so from here, okay, I'm just going to bring to the center. So basically from here, these are extracted from the prospectus, and from here I also make a simple assumption that assuming the proceeds raised from IPO did not cause a significant increase in the net profit, so what are we going to expect? So all this calculation is based on the post IPO 354 million shares. Okay, so from here actually I work out that the net profit margin based on the past 3 years of earning before the IPO, we are looking at the 4.4% for 2015 and 2.14% for 2016 and 4.05 for 2017. So as what we can see for the past 3 years, alright, what I can see here is that the net profit margins is relatively low at less than 5%. So from then I derive an average of net profit margins at 3.53% as the average. So the earnings per share for the respective 3 years is 0.16 cents and 0.08 and 0.16 cents. Okay, from then I actually derive the net percentage of revenue increase for these years and these 2 years. So from here there is a 2.5% increase in revenue and a 4.22% increase in revenue. As for the average, we have worked out there is a 3.36 increase in revenue. Alright, and from the extractions of the assets on page 216 as well. Okay, we do see that there is 67 million worth of assets and 65 and 58.6 of assets. With the net profit that they make, okay, assuming the IPO, the money, the proceed that raised is used to buy some assets, well, what how much return are they looking at? Well, the company is generating 8.57 returns on assets and 4.43% and 9.73% for the 3 years. So generally a pretty decent low figure. Well, thereafter extract the equity value of the company. And from the equity value, I do notice that, well, there's pretty good returns on the equity values, and there was a quite big difference between the return on assets and the return on equity. So return on equity was pretty high for the first year, which is very good, and 2017. So it's pretty low on, not pretty low, it's pretty neutral on the 2016. So what I can do notice here is that the company is probably on the high gearings, and from then on I continue on with the identification of these current assets and current liabilities to work out the current ratios. When this divided by this, you work out the current ratios. Okay, so from here I do work out that current ratios for the 3 years is relatively low at one ratio of 1 for 2015 and 1 for 2016 and 0.5 at 2017. This is considered low. Okay, so from here I actually see that, well, probably the major shareholders want to expand the company further, and the banks, I don't think, is extending their loans anymore. I'm not say extending, increasing their loans anymore, which they have reached probably the ceiling here, because the current ratio is relatively unhealthy. Okay, so just let me get that figure right. Okay, so what we see here is that current asset was 10 million and current liabilities at 18 million. So what we can see here, yes, the current asset was 10 million and current liabilities was 18 million. So that's what we can see that the current ratios is not very healthy, which probably explains why there could be reasons that the bankers is encourage them to get listed if they want to get more fundings. So this is what I can see, but nonetheless the company have remained profitable for the past 3 years, which is a pretty good sign. And from there I move on further. Okay, assuming with the proceeds, the company does grow for the next 3 consecutive years, with the net profit margin reported in the past 3 years as constant figure. And from then I work out the assumption of the estimates of the net profit margins, and from there I work out the earnings per share, assuming all these PE price rate at this range between 22 to 26 cents. What is the PE ratio that we are looking at? So I'm looking at this PE ratio between 14 to 17, which is pretty decent. And that since that they have announced a dividend policy of 35%, how much dividends as shareholders are we looking at, assuming these various share prices? So what I work out here is that you are looking between the dividend yields of 2% to about 2.5%, which is pretty low looking at CPF. But of course this company is growing, so that's where I find it a little uncomfortable here, because the dividend policy is rather low. So but this is assumption on the minimum aspect that there is no significant increase in the net profit. So now let's look further. Now assuming a better case of scenario that the IPO prospectus does cause an increase in the net profit by a magnitude of about 1.5 Okay, so but this is just an estimate, so there is no basis for me to derive this. But I'm just going to assume that the net profit margin, because it's so thin, I'm just going to increase a little bit more to 1.5, so work out about 5.3% here. And the revenue here we are looking at, okay, assuming the best case scenario, straight away, for the next 3 years, what we're looking at. So we work out to about here that that the net profit about 8.2 million. Okay, basically just need to take about 8.2 million. This is just a rough estimates. How much am I looking at? So we work out the earning per share of about 2.3 cents, and the PE ratios based on these respective prices will work out to be about 9.5 to range of 11. Okay, the dividends will be about 3% to 4. That's assuming the best case scenarios going forward. Okay, so but nonetheless, I'll be looking between the PE ratios trading between from here, because 3.7% is relatively attractive. So I'll be expecting the share price to trade between 11 to about 15 PE ratios. So this is the reasonable range we are looking at. So they should look be trading. I see that the share price could trade between the range of 25 cents to well, I don't know, 20 cents around there. So here we are. So I'm just going to go back to the earliest. So this is where I work out some estimations. So there I derived that, well, assuming the IPO the price come down to 18, what's the PE ratio they are looking at? Your PE here we are looking at a PE ratio of 11 at 26 cents, your PE ratio of about 16. Here respectively is the dividend yield that we are looking at if the share price were to come down to 18, and if the share price were to go up to 26, what is the dividend yield you are looking at? So the IPO price is around this range here, which is a dividend yield of 2.5, which is roughly the same as the CPF board. Okay, so but nonetheless the PE ratio is definitely attractive, but the current ratios is relatively high, relatively too low, which is a little bit risky. So as a start, I do think that this shares probably trade between 22 to 25 cents, these regions here. So there's the dividends that you're looking at if you want to invest in this company. So then we move on to the strength that I see in this company. Okay, so earlier we did mention that the share structure, alright, on this page 75. I'm just going to bring that back there again. Okay, this is the share structure. The bulk of it is owned by two major shareholders, and they probably will work very hard for this company. Okay, so that the kind of company structure that honestly I really like. Okay, so after listing, the major shareholders remain to hold the bulk of the business owner, and the public retain only 10%. And for this kind of food and beverage businesses, it tend to be more recession proof. That is one good thing of investing in this company. On the bad thing is they tend to move very slow. Okay, and the company on the neutral side, the return of equity is relatively good. Just let me get back to here. The return of equity is pretty good, but this is largely due to the increase in current liabilities of the loans that the company took. Okay, so I'm giving neutral on this area. On the weakness side, net profit margin is pretty thin at about 3% to 5% this range. The current ratio of the company is considered weak during the listing. Alright, and the share price, in my view, is that it should be able to easily hold at the range of 20 cents or 22 cents there about after listing. I don't see there's any likelihood that the share price is going to crash. No worries on that on listing. So I think the share price is going to be really good above 22 cents, maybe for 24, 25 cents. Anything above 26 cents, I think to me this is a disposal point, or because the PE ratio is high. On the 16 with a very low dividend yield at 2.1%. Alright, so because of this, the share price will have difficulty to move high and fast. The share price is going to move slow and low due to low dividend yield, etc. Apart from that, the company have a very low net profit margins. Okay, So any increase in net profit margin, you're really dependent on the number of restaurants they increase. Okay, well, the PE is low here, which generally sounds attractive, but the dividend yield is relatively low as well. Okay, and I do not see much. If you are a dividend investor, this company will relatively become very unattractive to you. But nonetheless, if you are looking for a recession-proof to park your retirement for about 2.5%, etc., this is the company that you should be looking for. This is very solid company for such in retirement planning, etc., which is relatively low risk because this is a food and beverage business. Okay, so these are my workings for today for this RE and S company holdings. Okay, on this Japanese sushi, udon, etc. So this IPO is led by the sponsors and issue managers, underwriters, and the placement agent as well is led by DBS. So if you are really interested to have your hands on this IPO shares, it's good. That's the cases where at times you will have different trading accounts and apply for the placement shares through the placement agent, in this case DBS stockbrokers. So I'm from Philips Securities. If I were to apply, I will be really applying through here to these 3 million shares. So that's about all for this presentation I have for you guys today. So I hope you enjoy my videos. So I'm Roland Pei from from Philip. So if you guys have any question on this IPO, can just drop me an email. So if you have any interested to have any trading accounts, you can just drop me an email at rolandpeibk@philip.com.sg or call my office at 6532-0126. So I think that's all for today. So good night and goodbye. And if you really like the IPO, do go to ATM apply. As for me, I'm just gonna give it a miss. As for the chili ratings, some of you have visited IPO Blogspots. I'll give it maybe 1 or at most 2 chili ratings for this company. So that's all. So I hope you guys enjoy my videos. Goodbye.